In this video, we will cover what is Accounting Part 4 and focus on users of accounting information. In the previous videos, we defined accounting as telling the financial story of a business using the tools available to an accountant. So accounting is really telling financial stories. We also said the tools accountants use to tell stories are the financial statements, specifically the income statement, statement of stockholders' equity, the balance sheet, and cash flow statement. And what are the organizations or entities that produce the financial statements or accounting stories? There are three types: for-profit entities like Apple, not-for-profit entities like United Way, governmental entities like the federal government. These three types of entities tell their financial stories by preparing financial statements. So when these stories are created or these financial statements are produced, who uses them? Who are the users of this financial information? There are two types of users. The first type of user, and the most important for financial accounting, are external users, or people who are on the outside of the organization. The second type of user is the internal user, or people who are on the inside of an organization or play some kind of internal role for the organization. Let's first look at external users. External users are those who don't work inside the organization, but need information about the organization. The first type of external user are customers. If you purchase a home from a builder with a 10-year warranty, you want to be sure the business will be around in 10 years to fulfill the warranty. You can use the financial statements of the business to determine the financial strength of the company and decide if the company can meet its warranty obligations. The second type of external user are shareholders. If you purchase shares of Apple stock, you want to learn as much about the company as you can. You use the financial statements to learn the financial story of the company you invested in. You use the financial statements to determine whether Apple is a good investment. The third type of external users are creditors. If you lend money to a company, you use the financial statements to find out how the company is doing. You want to know, are things going well or are things getting worse? The financial statements will let you know if the company can repay the money that was lent to them. The fourth type of external user are regulatory agencies. The SEC, or Securities Exchange Commission, is a regulatory agency that reviews the financial statements put out by companies to make sure all the accounting rules are being followed. The last type of external user are local and state and federal governments. If you are a government entity, you collect taxes. The taxes you collect are based on the income earned by the business. You would use the financial statements to verify that income and ensure the business is paying the correct amount of taxes. All of these are examples of external users, or people on the outside of the company. Now we will look at internal users. Internal users are people on the inside of the company. The first type of internal user are employees. If you work for a company, you want to know how the company is doing as a whole financially. You want to know if the company has a good financial story or bad financial story. You use the financial statements to help you understand your company. The second type of internal user is management. Managers are also employees, but we list them separately because managers make decisions for the company that impact all employees. What do managers use to help them make future decisions for a company? Managers use accounting information. In summary, users of accounting information can either be external users or internal users. External users are people on the outside of the company, such as customers, shareholders, regulators, creditors, or government agencies. Internal users are people on the inside of the company, such as employees and management. Both users, internal and external, need accounting information to help them make informed decisions about a company.